Well, it's establishing goals, right? Which is the way we do it in Intel is we do profit sharing. So as we make more money, our employees make more money. We have an employee bonus and we set goals for the corporation every year. As we achieve more of those goals, we have a variable pay structure. So again, another way, that employees make more money. So the first of all, we share the success, right? Second of all, people have to believe that it's their company. It's not a matter that they go to work for your company. They go to work for their company. If we are good enough in our work and the way we treat employees, if we treat them with the respect that they deserve, we give them the training they deserve, and in exchange we share our profits with them, then hopefully, at least this is what's worked out for us for our first 40 years, they have responded in kind by being careful with expenses. Right? The other end of that spectrum is you have to audit. And you have to agree that you've got rules and compliance and all the mechanics of that. And so Intel's very good on, I think, hopefully, and our employees hopefully believe we're very good at both ends of that. If you're in 8 businesses and you have to cut 3 of the businesses, then your output in the 3 that you cut is not going to be the same. If the topic is, can we figure out intelligent ways to prune expenses such that the fundamental output of the corporation is at least minimally affected? The answer is yes. I think that's called good management. The other part of this is you have to know the time frame. We invest in process technology, meaning how small we can make a transistor, many, many years in advance. We don't vary that year to year. We know where we have to go. We understand it. Good times or bad, we have to invest there, or our fundamental mechanism of running our company changes. So there are ways you can do it that are a disaster, right? But I think you have to be pretty clear about what the time frame is in those investments. And I think that you have to continue to apply very prudent judgment about what is no longer just fundamentally essential. We had to restructure the company a few years ago, and we went from approximately 100,000 employees to approximately 83,000 where we are right now. That was incredibly painful. And we did a lot of benchmarking. We did a lot of work. We hired in outside consultants. And we said, while we are still making money, we need to understand how it is we got into the organizational situation that we're in, and what are we going to do about it. And we restructured at a time that I think people were surprised that we restructured. And we restructured at a time that our profitability was going up. That's proven to be pretty lucky for us now. And there are a lot of CEOs in the world that are both having to restructure their company and deal with cost cutting and deal with the economic crisis all at the same time. And we've been lucky enough, or I don't know, whatever, for some reason, take your pick of luck or intelligence, that we looked at it. I want to now talk about your question, but in that light, right? Labor is usually not the #1 cost, certainly not in a manufacturing organization that has the billions of dollars in capital equipment that we have. Our labor costs are actually pretty modest in comparison. What one has to do is to keep in balance. Sometimes you do it with benchmarks. Sometimes you do it with your own efficiency operations. Sometimes you do it as just as a matter that you're closing a location. If you think about your workforce as your most valuable asset, and it far and away outstrips anything, then if you cut it, and you cut it arbitrarily, then you will lose the loyalty of everyone that's left. So I'd say if you have to cut it, you cut it, and we've done that. But you do it in such a way that the employees that remain believe there was enough transparency and honesty and lack of duplicity in those decisions, and they understood those decisions such that they knew why you did it, and they believed that the organization that was left was going to be healthier as a result.